What's going on, everyone? This is Curtis. Welcome back to the channel. Today we're talking once again about PAVmed, this time about their Q3 earnings report. Now the stock has taken quite a downturn since the earnings report came out, dropping over 80% at this point. So is the company currently way oversold and a great buying opportunity? Or was the price just a few months ago way overpriced and it's not coming back down to a realistic valuation? Well, let's take a look at the earnings report and see if we can piece this together. The first headline number that, rightfully so, got all the attention was the numbers from the ESO test last quarter. And not too surprisingly, based on the drop in the stock price, they were not good at all, as they were flat quarter over quarter. Now, the person that put this press release together did highlight that this number, while flat quarter over quarter, is actually still a 300% increase over the same period last year. It's still not a good sign when comparing these numbers to basically early, essentially zero sales from when they first got this thing off the ground. This kind of comparison is kind of silly to me, but that's neither here nor there. So what went wrong? We'll get into that a little bit later. Let's first take a look at the rest of the earnings report before we dig into the call for more of the answers. For the rest of the report here, we can see that they actually launched their test centers in Denver, Salt Lake City, and Las Vegas, and plan to expand to the Pacific Northwest. They did highlight a few other items, including the acquisition of Capnostics, which is another diagnostics company that manufactures a 510(k) cleared, European CE mark certified, non-endoscopic, sponge-based esophageal cancer detection device, which has been used in pre-commercial clinics research of esophageal precancer biomarkers at major academic medical centers, including Mayo Clinic and Johns Hopkins. And the last bit of information here on the report is talking about CarpX. They have trained 7 surgeons on the CarpX procedure and 5 more are scheduled to undergo training. 11 CarpX procedures have been performed and 8 more are currently scheduled. Now, not a huge number, but it's a step in the right direction. This is also an item that will have P&L ramifications in the coming quarters. Although this rollout has been slower because of the virus, they are still behind what many investors expected, considering they did the first procedure on a patient in February of 2021 and are only now ramping up the procedures. Hopefully they're able to accelerate the procedures and the training in the coming months. This ramp up will actually help investors put a real value to CarpX and should help PAVmed along the way. Now, before we get into the earnings call, I want to discuss the actual agreement they have with the inventors of the ESO products. So I think a lot of us have heard that these were made by Case Western scientists, but I wasn't really aware, and I don't think I've ever seen it on the StockTwits account of anybody mentioning what the agreement actually is. So what is the deal? We can see here that the fee is 5% of net sales up to $100 million and 8% of net sales over $100 million. Furthermore, this agreement will likely be in place until the 2030s. This will definitely be a drag on the profits of the company as they ramp up sales. Now let's get to the earnings call to try to figure out how they had a 0 increase quarter over quarter in their ESO product sales. So what happened last quarter? Well, first off, we learned the deal with UpScript actually wasn't finalized until the end of 2021, actually in December of that year. Now that the deal is finalized, they should start to see referrals to their Phoenix clinics. And as for the sales team itself, during the call, they noted that the third quarter was somewhat of a transitional quarter as we moved to a direct sales force and increasingly focused on primary care physicians, and we dedicated human resources to the expansion of our sales infrastructure. Additionally, Dr. Acklog said that nearly all the tests performed in the third quarter were through our traditional target, which were the GI physicians. We didn't launch the Phoenix test centers until August. By the time we had our local sales reps in place, we were well into September. So the number reflects almost entirely the same target we had in the prior quarter. So essentially they were in transition type period where instead of working on selling the product itself, they were working on training the sales folks, and they did not even have the test centers available in Phoenix to try to have anybody get the test performed at those facilities. However, even though this is a pretty good reason, I'm still a little bit disappointed that these sales were flat quarter over quarter. I expected that the physicians that already were using this product would continue to use more and more of this product over time, and seeing that it's flat from quarter over quarter is not really encouraging towards the exponential growth that I was kind of hoping for as they got more and more doctors online. I expected that once they saw the product, got the test back, they would encourage more patients to get the test. But that just hasn't happened quarter to quarter just yet. This might have to do partially with insurance companies not currently being able to accept, covering this fully here yet. And just with Medicare reimbursement, perhaps that slowed some things down. And it'll take time to get traction on this and get more customer awareness of it. but still is a little bit disappointing to me that there wasn't at least some increase over time. So that leads us to the future plans. What are they going to still do now that they're launching the sales team? What does that look like now? Earlier in the call, they mentioned that they have 17 sales reps and plan to expand that figure 7-fold. That would be about 120 by the end of 2022 as they expand test facilities across the country. This is a massive increase and should really kickstart the growth of the ESO products. Additionally, and more in the near term, they plan to launch their own CLIA laboratory. This will allow them to recognize all the revenue for each of the tests that are performed. They currently have an arrangement with ResearchDx, which performs the tests and actually takes half of the revenue. Now, getting their laboratory up and running will obviously double revenue. However, everyone's expecting this, so I don't think this will be a massive kick to the stock, but it'll definitely be good to see regardless. So what's the takeaway here? Well, on one hand, the doctors that were currently using this, the GIs that they had that had used it in the past quarters, had zero increase quarter over quarter. On the other hand, they're still just setting up their sales team and just now getting their advertising and marketing lined up. So while certain doctors might not have a lot of growth quarter over quarter, there still is a lot of room for sales as they expect the target market for this product to be about 13 million people per year currently. That's just in the US. I think the next few quarters here are going to be really important. If they're able to use this sales team that they're ramping up to actually drastically increase sales, I think this thing could be a home run. However, if sales are slow to grow, that means they're probably going to need a lot more money to advertise and get the market, get the customer base aware of this product and aware of the need for it. I think customers are very well aware of colon cancer and products like Cologuard. You can kind of start getting the name out there and people are very well aware of the ramifications of this cancer. I think because there's not a whole lot of great ways to test for esophageal cancer, that less people are aware of it, less people are aware that if they have this acid reflux disease, they need to get tested. So getting that customer awareness is just going to cost a lot of money, which means they're probably going to have to raise more money at some point in the near future if this doesn't see a great increase over the next 2 or 3 quarters. So we'll see what happens. This might be a case of the rich getting richer, and as the stock price goes up, that makes it easier to raise more money, easier for them to advertise faster, easier for them to ramp up sales quicker. And it could be a case of the poor getting poorer, unfortunately, too. And if sales don't quite happen as quick as possible and they have to raise more money, that means more dilution and a lower stock price with people not as excited about being diluted in their shares, which makes it just harder for them to raise money and hard for them to get awareness of this product. So I think the next few quarters, like I said, will be really telling with where this thing's going to go next. However, one of the nice things with this company is they have a couple different shots on goal. So if the ESO products are a little bit slower than we hope, and if CarpX is actually a home run and they start getting a lot of sales, that could be a lot of just good revenue and good profits that hits the bottom line that gives them the money to perhaps invest more in the ESO products or maybe buy another company and just buoy the stock and not quite go through as much cash burn as they might have to go through as they launch the ESO products. Well, that's it for today, but I'm curious what you guys think. Do you think the stock price now is a bargain, or do you think it was just way ahead of itself when it hit $9 a share back in, I think it was about September of 2021? Let me know in the comments below what you think. I hope you enjoyed the video. If you did, give it a like. Don't forget to subscribe for more content, and I'll see y'all next time.